You wake up one morning, casually checking the exchange rate, not expecting anything different, because for years, it's always been the same story. The dollar goes up, your currency goes down, prices rise, life gets harder. But imagine opening your phone and seeing something that almost feels illegal in today's global economy. Your money didn't fall, it didn't struggle, it didn't survive, it won. That is exactly what just happened in Zambia. In a world where the US dollar has been crushing currencies from Africa to Asia, one African country quietly did the unthinkable. Not by shouting, not by headlines, but by results. Zambia's currency, the kwacha, didn't just recover. It surged. It climbed so fast that it beat the US dollar itself and outperformed almost every currency on Earth. And here's what makes this story uncomfortable for a lot of people. Zambia was not supposed to be here. Just a few years ago, this same country was being written off as a financial disaster. Investors ran, credit dried up, confidence vanished. In 2020, Zambia became the first African country to default on its debt during the pandemic. That moment changed everything. When a country defaults, money doesn't just leave, it escapes. Dollars disappear. Imports become expensive overnight. Inflation explodes, and ordinary people pay the price long before politicians do. The kwacha collapsed hard. For everyday Zambians, it wasn't theory. It was pain. Food cost more. Fuel cost more. Every paycheck bought less than the one before. The currency stopped being just money and became a reminder of how fragile life had become. So when people hear today that Zambia now has the world's best performing currency, the first reaction is disbelief. The second reaction is suspicion. Was this luck? Was it temporary? Was it just copper prices? Because countries don't go from default to dominance by accident. And currencies don't flip from worst to first without something deep, changing underneath. What's happening in Zambia right now is not a miracle, it's not magic. And it's definitely not random, it's the result of painful decisions, quiet reforms, and a shift in how the country interacts with the global financial system. Here's the part most headlines skip. Zambia didn't suddenly become rich, it didn't discover new oil, it didn't print confidence out of thin air. What it did was something far less dramatic, but far more powerful. It changed behaviour. After defaulting, Zambia was forced into uncomfortable conversations. Conversations with creditors, with international lenders, with institutions it had avoided for years. Debt had to be restructured, promises had to be kept, and discipline had to replace denial. At the same time, something else was happening in the background. Copper prices were rising, and for Zambia, copper is not just a commodity, it's the backbone of the economy. As the world rushed toward electric vehicles, renewable energy, and massive infrastructure upgrades, demand for copper exploded. That demand meant dollars started flowing back into Zambia. Not borrowed dollars, earned dollars, export dollars. And that distinction matters more than people realise. Instead of burning through foreign reserves trying to defend the currency, Zambia allowed the market to breathe. The central bank didn't panic. It didn't impose heavy controls. It let supply and demand do their work. And slowly, pressure on the kwacha began to ease. At first no one noticed. Then traders noticed. Then investors noticed. Then the charts changed. The same currency that was collapsing a year ago started climbing. Week after week. Month after month. Until suddenly Zambia wasn't just recovering, it was outperforming everyone. According to global market data, the kwacha became the best performing currency in the world. Think about that. From near collapse to number one. Not against weak currencies, against all of them. And that raises a bigger question. If Zambia can do this after defaulting, after being written off, after being ignored, what does that say about the rest of Africa? Because this story isn't just about Zambia, it's about what happens when fear fades, when discipline returns, and when a country finally stops fighting reality and starts working with it. But here's where things get even more interesting. Because currency strength is not always a blessing, and what Zambia does next will matter more than how high the kwacha climbs today. To understand why Zambia's currency didn't just rise but exploded upward, you have to look past the headlines and into the mechanics of fear. Because currencies don't collapse first, confidence does. For years, Zambia was trapped in a familiar African cycle: dollar hunger. The more the kwacha weakened, the more everyone wanted dollars. Businesses priced goods in dollars. Importers rushed for dollars. Even ordinary people saved in dollars if they could. Not because they loved the dollar, but because they no longer trusted their own money. And that behaviour quietly kills a currency. When everyone is chasing dollars, demand overwhelms supply. The exchange rate slides, panic spreads. Then panic creates more panic. Zambia lived inside that loop for years, but the turning point didn't come from slogans or speeches. It came from structure. After the debt default, Zambia had no choice but to sit down with creditors. China, Western lenders, multilateral institutions. It was painful, slow, politically risky. But eventually something rare happened, a breakthrough. Debt restructuring wasn't just about delaying payments, it was about breathing room. Zambia was no longer scrambling every month to find dollars just to survive. External pressure eased, dollar desperation faded, and markets noticed. At the same time, the central bank made a decision most governments are afraid to make. It stopped pretending. Instead of forcing the yi, exchange rate, or burning reserves to defend an illusion, Zambia allowed the kwacha to reflect reality. Real inflows, real demand, real supply. No theatre. And then came the silent game changer. Copper exports. Zambia is one of the world's key copper producers. And copper is no longer just metal. It's the wiring of the future. Electric vehicles, power grids, renewable energy, data centres. As global demand surged, copper prices climbed, and Zambia's export earnings followed. But here's what made this moment different from past booms. Those dollars actually came home. Mining companies repatriated more of their earnings. Dollars entered the domestic financial system instead of sitting offshore. That increased supply inside the country. And when dollar supply rises while panic demand falls, the equation flips. The kwacha strengthened. Slowly at first, quietly, then consistently. Foreign exchange markets responded immediately. Traders stopped betting against Zambia. Portfolio. Investors returned. Not because they suddenly loved Zambia, but because confidence had shifted. And confidence moves markets faster than fundamentals. Once traders believe a currency is no longer being artificially propped up, they stop attacking it. Once investors believe policymakers know what they're doing, speculation dries up. Fear loses its grip. That's when momentum takes over. The kwacha didn't just climb, it accelerated. Week after week, gains stacked. Losses from the previous year evaporated. And then something happened that shocked global markets. Zambia's currency topped the charts. From one of the worst performing currencies on earth to the best performing currency in the world. In a matter of weeks. Let that sink in. This wasn't the US dollar collapsing. This wasn't global chaos. This was Zambia needing the dollar less. And that distinction changes everything. Strong currencies are not built by fighting the dollar. They're built by reducing dependence on it. Zambia didn't ban the dollar. It didn't wage war on it. It simply stopped letting it dominate every transaction, every decision, every expectation. And as dollar pressure faded, behaviour changed. Businesses stopped hoarding foreign currency. Importers bought only what they needed. Inflation cooled, prices stabilised. Trust, slowly, returned. Nothing dramatic, nothing loud, just discipline. But here's the part most people don't talk about. Currency strength is not pure victory. It comes with consequences. Because when a currency rises fast, exporters feel pain. Copper is sold in dollars. When those dollars convert into a stronger kwacha, local earnings shrink, margins tighten, expansion slows. And then there's hot money, short-term capital chasing returns. It flows in fast when confidence is high. And it can leave even faster when conditions change, which means Zambia is now standing on a knife's edge. Because the same momentum that lifts a currency can reverse overnight if global conditions shift. And that brings us to the real test. Not how high the kwacha rises, but how Zambia manages success. Because strength, unmanaged, can become the next crisis. This is where most countries get it wrong. Because when a currency starts rising, leaders celebrate too early. Charts go up. Headlines feel good. And everyone forgets that strength can be just as dangerous as weakness if it isn't managed carefully. A strong currency, feels like relief. For ordinary people, it means cheaper imports. Fuel prices ease, medicines cost less, food inflation slows. Suddenly, daily life doesn't feel like a constant emergency anymore. And that matters a lot. But currencies don't exist to make people feel good. They exist to balance an economy. And when that balance shifts too fast, pressure builds in places most people don't immediately see. For Zambia, the first pressure point is exports. Copper is priced in dollars, always has been. But when those dollars are converted into a stronger kwacha, exporters receive less local currency than before. On paper, Zambia is earning more foreign exchange. On the ground, mining companies feel squeezed. Margins tighten. Costs don't fall as fast as the exchange rate rises. Expansion plans slow. Hiring pauses. And if currency strength becomes too aggressive, the very exports supporting the economy can start to suffer. This is why central banks fear sudden success. Then there's the second risk. Capital flows. Not all money entering Zambia right now is committed to the long term. Some of it is patient capital, infrastructure, production, value creation. But some of it is fast money. Money that moves because charts look good. Money that enters because yields are attractive. Money that has no loyalty. And that kind of capital doesn't wait for explanations when conditions change. If global interest rates rise, if copper prices fall, if risk appetite disappears, it leaves instantly. When that happens, currencies don't decline gently, they drop fast. This is why Zambia's current moment is so delicate, because success has created expectations. And expectations are dangerous. When people believe a currency will always rise, pressure mounts on policymakers to defend it, to intervene, to promise stability at all costs, to fight the market. And history shows what happens next. Foreign reserves get burned, confidence breaks, and the cycle resets. Zambia has seen this movie before, so has Africa. That's why the Bank of Zambia's restraint matters more than the rise itself. The kwacha strengthened, but authorities didn't boast. They didn't peg. They didn't promise permanence. They allowed flexibility. Because a healthy currency doesn't obey political speeches. It responds to productivity. And this leads to the real question. What does Zambia do with this window? Because currency strength creates space. Space to plan. Space to invest. Space to think long-term instead of surviving month to month. When inflation stabilizes, budgets start making sense. Governments can plan roads, schools, hospitals, power projects without costs exploding halfway through. That alone can change development trajectories. But the bigger opportunity lies beyond stability. It lies in transformation. A strong currency makes imported machinery cheaper, technology more accessible, industrial inputs more affordable. And for Zambia, that creates a rare chance to move up the value chain. Instead of exporting raw copper, Zambia can process more at home. Smelting, refining, manufacturing components. Every step adds jobs, skills, income. This is how countries escape resource dependence. Not by abandoning commodities, but by capturing more value from them. But here's the hard truth. Currency strength alone does nothing. If Zambia wastes this moment, if it remains dependent on copper exports alone, then the kwacha's rise will fade the moment prices fall. Because in the long run, currencies follow productivity, not optimism. This is where many resource-rich countries fail. Booms come, money flows in, consumption rises, then prices fall, and nothing structural has changed. Zambia now stands at a fork in the road. One path leads to diversification, agriculture, manufacturing, services, an economy that earns foreign exchange from multiple sources, a currency supported by real productivity. The other path leads back to vulnerability, a stronger version of the same old dependency. And this is why the kwacha's rise is not the story. It's the signal that something shifted. That fear loosened its grip, that discipline returned. What matters now is whether Zambia builds an economy that deserves a strong currency, not just one that enjoys it temporarily. So the real question isn't whether Zambia's currency is strong today. That part is already settled. The real question is whether this moment becomes a turning point or just another chapter in a familiar African cycle. Because history is very clear on one thing: currency success is fragile. Across the world, countries have watched their currencies surge during commodity booms, only to collapse when prices fell and discipline faded. The charts looked beautiful. The fundamentals didn't last, and when the reversal came, it came fast. Zambia now has a choice very few countries ever get. A strong currency changes how a government behaves. When money is weak, leaders live in survival mode. They rush to pay urgent bills. They react instead of plan. Long-term development becomes a luxury. But when a currency stabilizes and strengthens, something rare happens. Space opens up. Space to plan infrastructure. Space to invest in power, roads, rail and industry. Space to think 5, 10, 20 years ahead. For Zambia, this is the first time in years that economic decisions don't have to be made under panic. Inflation is easing. Costs are more predictable. And investor confidence, once shattered, is slowly being rebuilt. That confidence matters more than rankings. Investors don't just chase growth numbers, they fear currency risk. A stable and strengthening currency sends a signal that spreadsheets can't ignore. Discipline, credibility, control. And that attracts a different kind of capital. Not fast money chasing yield, but long-term investment. Factories, processing plants, value-added industries. This is how economies transform. Not overnight, not through announcements, but through quiet consistency. A strong kwacha also makes industrialization more realistic. Imported machinery becomes cheaper. Technology becomes accessible. Infrastructure costs fall. And suddenly, local processing makes economic sense. Instead of exporting raw copper and importing finished goods, Zambia can start capturing value at home. Jobs, skills, manufacturing capacity. That is how resource wealth becomes development instead of dependency. But here's the warning, and it's an important one. If Zambia mistakes currency strength for success, this moment will pass. If productivity doesn't rise, if diversification doesn't happen, if copper remains the only pillar holding the economy up, then the kwacha will eventually follow the same path as before. Currencies don't obey hope, they obey fundamentals. In the long run, they reflect what an economy produces, not what it celebrates. That's why Zambia's story matters beyond its borders, because nothing magical happened here. No new resources were discovered. No shortcuts were taken. What changed was behaviour. Debt was confronted instead of ignored. Exports were managed instead of wasted. Panic was reduced. Dollar dependence was lowered. And discipline replaced denial. That's the lesson. Currency strength is not the goal, it's the signal. A signal that fear has loosened its grip. A signal that reform is working. A signal that opportunity exists. Whether that opportunity becomes transformation depends entirely on what happens next. If Zambia uses this window to diversify its economy, build productivity, and invest in long-term growth, then this moment will be remembered as the beginning of something bigger. If not, it will fade quietly, just like so many commodity booms before it. Because in the end, currencies don't define countries, countries define their currencies, and Zambia now has the rare chance to prove it.